So I've been recording a video this morning outlining why Tattooed Chef are my biggest position and why I'm bullish on that company. I will still upload that video, but this news came out just as I'd finished filming and I really wanted to get this out and really celebrate the news. So Tattooed Chef enters into agreement to acquire New Mexico Food Distributors Incorporated and Cast and Tortilla Factory LLC. So these two companies are collectively known as the Foods of New Mexico. So they bought this company for $35 million in cash. And if you remember the last earnings report, they're holding $200 million in cash. So, you know, a small proportion of the cash that they're holding, but they did say they were going to use that for acquisitions. So they've certainly held up that promise. In terms of what they expect in return, they expect that at full capacity, New Mexico can contribute up to $200 million annually in revenue in the next 2 or 3 years and create significant value for our stakeholders. So even in the next 2 or 3 years, which is a really quick turnaround, they expect to scale this company up to $200 million in revenue. That's significant. And in terms of what they want to do, there's some really critical information here as well. They want to diverse their manufacturing capabilities. They want to expand their production capacity, and they want to accelerate expansion outside of frozen food. And this is really critical. Tattooed Chef were extremely niche. The acquisition of this company allows them to move into a more ambient market, which is really, really exciting and shows that they do want to grow and expand into other areas. Now, there is some bad news in this report that we also need to cover, but it is really, really important news. So, for full year 2021, Tattooed Chef is updating its guidance and now expects revenue in the range of $235 to $242 million. So, if we compare that to what they said in the last earnings, $222 million, that's a significant step up, which is good news. Now, if we look at the gross margin in the range of 20 to 25%, now that stayed exactly the same. And that's maybe a slight cause for concern because if you're increasing your revenue, really we want to see an increase in margin as a result of that. But adjusted EBITDA in the range of 2 million to 4 million for the full year 2021. This is the really concerning piece. 2 million to 4 million. Their previous guidance was 8 million to 10 million. So that's a significant step down. And in the coming days, I expect to see a shock to the share price as a result of that. Now, this is not something to be overly concerned about, as I've said before. You know, the company is remaining profitable. Their guidance still says they're profitable, and it looks like they're going to be growing at a massive rate, and we're only very early in the year, so this is their full year guidance. We'll see what happens throughout the year, but it is something to watch, and if that profitability starts to slip to negative, that's a real cause for concern. But hopefully this will allow them to grow even faster than previously predicted, certainly over the next few years, and we can really look to seeing some strong sales and revenue from Tattooed Chef going forward. So that's all, just a quick update. Overall, very excited news, and I can't wait to see what they do with the rest of that cash that they're holding, and maybe we'll hear from Tattooed Chef around more acquisitions in future. That's all from me. Have a good day.